Brad Williams, Frugal Finance, understanding mutual funds, fees and expenses. All mutual funds charge fees and expenses. Some of which you pay directly, like sales charges and redemption fees, and others that come out of the fund's assets to pay for such thing as managing the fund's portfolio or marketing and distribution. These funds and expenses can vary widely from fund to fund or fund class to fund class. Even small differences in expenses might make a big difference in your return over time. FINRA provides an easy-to-use online fund analyzer that allows you to compare expenses among funds or among different share classes of the same fund. Using a live data feed that captures expense information for thousands of funds, the analyzer can help you understand the impact fees, expenses, and discounts have on your investment over time. Once you set up to 3 funds and type in the amount you plan to invest and how long you plan to keep the analyzer does the rest. See the review of the fund analyzer and the different comparisons that can be modeled in this tool. It's right up here under Fund Analyzer. This information will be linked below. Here are the types of fees that may be charged on an ongoing basis. You have a management fees. These fees pay the fund's portfolio manager. A 12B1 fee, these fees, capped at 1% of the assets in the fund, are taken out of the fund's assets to pay for the cost of marketing and selling the fund, for some shareholder services, and sometimes to pay employee bonuses. Other expenses, this miscellaneous category includes the cost of providing service to shareholders outside of the expenses covered by the 12B1 fees or portfolio management fee. You also pay transaction fees for the trades the fund makes, though this amount isn't reported separately as the other fees are. The following fees may also apply based on actions you take. Account fee. Funds may charge you a separate fee to maintain your account, especially if your investment falls below a set dollar amount. Redemption fees discourage very short-term trading. Funds often charge a redemption fee to investors who sell shares shortly after buying them. Redemption fees may be charged anywhere from a few days to over a year. So it's important to understand if and how your fund assesses redemption fees before you buy, especially if you think you might need to sell your shares shortly after purchasing them. Exchange fees. Some fees also charge exchange fees for moving your money from one fund to another fund offered by the same investment company. Purchase fees. Whether or not a fund charges a front-end sales charge, it may assess a purchase fee at the time you buy shares of the fund. One easy way to compare mutual fund fees is to look for the fund's total annual fund operating expenses, otherwise known as the fund's expense ratio. This percentage, which you'll find in a fund's prospectus on the fund's website or in financial publications, will tell you the percentage of the fund's total assets that goes towards paying its recurring fees every year. The higher the fund's fees, the greater its handicap in terms of doing better than the overall market as measured by the appropriate benchmark. For example, if you were considering 2 similar funds, funds ABC and funds XYZ, you might want to look at their expense ratios. Suppose fund ABC has an expense ratio of 0.75% of assets, while fund XYZ had an expense ratio of 1.85%. For fund XYZ to match fund ABC in annual returns, it would need a portfolio that outperformed funds ABC by more than a full percentage point. Remember, though, that the expense ratio doesn't include loads, which are fees you pay when you buy or sell your fund. It also doesn't include any discounts or waivers the fund or your brokerage firm might offer. You should also be aware of transaction fees, which the mutual fund pays to a brokerage firm to execute its buy and sell orders. Those funds aren't included in the expense ratio, but are subtracted before the fund's return is calculated. The more the fund buys and sells in a portfolio, which is reported as its turnover rate, the higher its transaction cost may be. Understanding loads? When you buy mutual fund shares through an investment firm, you might have to pay sales charges called loads, which are calculated as a percentage of the amount you invest. Like commissions on stocks or bond transactions, these charges compensate the firm or investment professional. Key terms to know include front-end load, a commission you pay at the time you buy the shares, which can range between 2% and 5%. Back-end load, a charge you pay only if you sell your shares during the period the charge applies, which can be several years after purchase. A level load, an amount the fund collects every year you hold the fund. No load, funds that don't impose sales charges but might have other fees. Typically buy no load shares directly from the investment company that offers these funds. The rate at which you're charged varies from fund company to fund company. In addition, different classes of shares assess the charge at different times. Be sure you understand the financial consequences of choosing a specific share class before you purchase a fund. Breakpoints. Sometimes load funds offer volume discounts for higher investment amounts, in much the way that supermarkets sometimes offer economy bargains for buying certain things in bulk. In the case of funds, a front-end load may be reduced if you invest a certain amount. The amounts at which your sales charges drop are called breakpoints. The breakpoints are different for each fund, and your investment firm must tell you what they are and must apply breakpoints if your investment qualifies. Breakpoint policies vary, but some funds let you qualify for breakpoints. All your investments within the same family fund, funds offered by the same fund company, add up to the breakpoint level. Some funds let the total investments made by all of the members of your household count towards the breakpoint. In addition, some funds let you qualify for a breakpoint over time instead of with a single investment by adding your past investments to your new ones. You might even qualify for a breakpoint if you write a letter of intent informing the fund that you're planning to invest enough to qualify for the breakpoints in the future. In short, funds can offer breakpoints any number of ways, or they may not offer them at all. Whenever you're entitled to a breakpoint, however, the fund is required to apply them to your investment. Sales charge waivers. To maximize your investment, be sure to understand and explore any potential sales charge waivers. Some waivers to be aware of: mutual fund exchange. Mutual funds typically allow investors to sell shares in one fund and purchase shares in another fund in the same fund family on the same date without incurring sales charges. Right of reinvestment. A fund family may allow customers to redeem or sell shares in a fund and reinvest some or all of the proceeds without paying a sales charge or recoup some or all of the contingent deferred sales charge. Generally, in order to be eligible for this type of waiver, the investment must be made within a specified period of time, for example, 90 days, although time periods may vary substantially across fund families. The redemption and reinvestment must take place in the same account. The redeemed shares must have been subject to a front-end or deferred sales charge, and the redemption and reinvestment must comply with any other terms and conditions required by certain investment companies. For example, reinvestments must be made in the same class of the redeemed fund. Net asset value transfers. Some fund families allow customers to purchase Class A shares without paying the front-end sales charge if the customer purchases such shares using proceeds from the sale of shares in a different mutual fund family for which the investor paid a front-end or back-end sales charge. These transactions are sometimes referred to as NAV transfers. Most fund families that allow for such waivers require the customer to invest the proceeds from the sale within 30 to 90 days. Waiver for retirement accounts and charities. Some fund families waive the front-end sales charge associated with Class A shares for certain retirement plans and charitable organizations. Waiver for 529 plans. 529 plans offer sales charge waivers in a variety of specific situations, such as existing account owners currently investing in charge-waived A shares. Group 529 plans. Plans purchased through an investment advisor. Certain customers approved for discounts by the program manager or broker-dealer. Rollovers from a qualified 529 plan or special share classes. Tax consideration. You'll have to pay taxes on a mutual fund's income distribution and usually on capital gains if you own the fund in a taxable account. You might have short-term capital gains, which are taxed at the same rate as your ordinary income, something you might try to avoid when you sell your individual securities. Might also owe capital gain taxes if the fund sells some investments for more than it paid to buy them, even if the overall return on the fund is down for the year, or if you become an investor of the fund after the fund bought those investments in question. If you own the mutual fund in a tax-deferred or tax-free account, such as an individual retirement account, no tax is due on any of these distributions when you receive them, but you'll owe tax at your regular rate on all withdrawals from a tax-deferred account. You might also make money from your fund shares by selling them back to the fund or redeeming them if the underlying investments in the fund have increased in value since the time you purchased shares in the fund. In that case, your profit will be the increase in the fund's per share value, also known as its net asset value. Here too, taxes are due the year you realize gain in a taxable account, but not in a tax-deferred or tax-free account. Capital gains for mutual funds are calculated somewhat differently than gains from individual investments, and your brokerage firm or the fund will let you know your taxable share of the fund gains each year. Comment if you have any questions relating to the complexity and cost of mutual funds. Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.